Bloomberg Tech is live from the heart of Silicon Valley with Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, OpenAI says advanced AI models unexpectedly hacked Hugging Face's system during testing, raising fresh concerns about AI safety. Plus, AMD is making a major AI bet, saying it will invest up to $5 billion in Anthropic. Will it help AMD compete against Nvidia? And we'll break down Apple's latest overhaul of its Mac lineup for the AI age as Samsung makes its biggest consumer hardware push of the year at its Galaxy Unpacked event. Let's get straight to our top story. OpenAI is disclosing what it calls an unprecedented AI security incident. The company says it was testing GPT 5.6 Sol and an even more capable but unreleased model with reduced safety guardrails to measure their cyber capabilities. During this evaluation process, OpenAI says the models found a way out of their sandbox testing environment, obtained internet access, and then targeted AI platform Hugging Face, searching for secret information the models could use to cheat the evaluation. OpenAI says the models ultimately reached Hugging Face's production systems. The investigation is still ongoing, but it's already raising new questions about what today's frontier AI models are capable of. Let's bring in Bloomberg's Rachel Metz, who broke the story. And I think the best place to start, Rachel, is how did this happen?
So this happened while OpenAI was testing some model cybersecurity capabilities. It was actually essentially giving it tests, like problems on a test, like a person would conduct a test. And in the process of seeking answers to the test, the model did a series, or the models, it was several of them, did a series of things in order to get access to the internet and go over to Hugging Face's servers to try to find answers to the test.
What have OpenAI and Hugging Face done in response to this? Like, they've said the investigation's ongoing, but if this is as significant a security incident as the companies have portrayed it as, and as the internet is discussing it as, they must have taken some action in the interim.
Yeah, they've done several things already. So OpenAI is implementing some controls. It says even though it might slow things down with their own work in order to patch any vulnerabilities, it's also working with Hugging Face to go through everything that happened here. There was a third-party company whose software the AI models found a vulnerability in order to get access to the internet. So OpenAI did what you're supposed to do with these kinds of things, and that is let that vendor know with a certain amount of time so that they could patch their own software. And one other thing that they did is OpenAI several months back, similar to what Anthropic has done with its most capable cybersecurity models, is they have a trusted access program. And so that gives certain vendors and researchers access to these less restrictive cybersecurity aimed models. And so they brought Hugging Face into this program so that Hugging Face can also be more aware of what's happening with those models.
I ran into you on my way out yesterday evening, and I think the kind of moment was, what is happening? You know, it's hard to understand in the moment how severe something is, what happened. But do you have a sense overnight, how seriously the companies are treating this, what the sort of sentiment of industry is towards like what this represents? It's a worrying development to a lot of people in the world of AI.
Yeah, I guess I think about it kind of two ways. One is this is not good if you have AI models that are, breaching the containment you set for them and then going off and doing things and hacking, essentially, like accidentally hacking into another company's servers like that. I think we can agree that that's problematic. But on the other hand, the model did, I would argue, essentially what it was tasked with doing. It was told to solve a series of problems related to an evaluation process called exploit gem. And the model took these steps. It just wasn't the steps that the researchers were expecting it to take, or perhaps might have wanted it to take.
I'm going to get into some of the detail on why the models took those steps right now. Bloomberg's Rachel Metz, thank you very much. Let's stay with the OpenAI story. Joining us now is Sprague, Hackerone CEO, who says the latest incident isn't a scandal, but an example of responsible behavior as the company stress tested capable models. Hackerone, of course, a leading independent cybersecurity testing firm. It probes AI models and software for real-world vulnerabilities. And Kara, thank you so much for your time. And welcome back to the show. Let's start with your reaction to what happened. You believe that actually how OpenAI and Hugging Face have handled this is completely appropriate.
Yeah, what we're seeing here is an example of a frontier lab that is stress testing its most capable model. We want to see the frontier labs doing this kind of safety testing. And we also want to make sure that when something goes wrong, they come forward quickly and they disclose that. And that's exactly what happened here.
They're saying that the investigation's ongoing. A lot of people phoned me overnight and were like, this is a big moment for AI. I think the way that Clem DeLong, the CEO of Hugging Face, and Sam Altman, the CEO of OpenAI, have kind of framed it as that this is kind of day one in our exploration of AI and cyber. What do you want to see happen as this investigation proceeds, and what determinations you think need to be made?
Well, I think as this investigation proceeds, we want to make sure that we are continuing to test the safety and alignment of these cyber capable models. I would frame this as the next turn of the crank, where a model not only broke out of its sandbox here, but then it went and actively exploited and broke into a third party, in this case, Hugging Face. So that's really the new part in this story, is the breaking into a third party. Now, what we can take away from this incident is it was a controlled test. And again, both parties collaborated very quickly to come forward and disclose it. And both are taking a number of steps to address it. I think there's also some lessons in here for security leaders and defenders, which is the time is now to really retool environments to make sure that their discovery to remediation gap is really closed. Because many of the exploits, in fact, all of the exploits that were used in this model's behavior, those were issues that are sitting in someone's backlog that need to be addressed. They need to be found and fixed.
Kara, I have both a technical and sort of academic question for you from our audience, and that is that OpenAI relaxed let's call it the attacking model's guardrails for this evaluation, right? The way they described it, reduced cyber refusals for the evaluation process. In response, Hugging Face tried to use an open source model in defense. But what it said was that open model also had guardrails in place that limited its abilities to defend. Could you sort of unpack that a little?
Yeah, so the first model that Hugging Face tried to use, or the first models that they tried to use in order to assess the attack, there were 17,000 actions that OpenAI's model took over the weekend as part of the cyber attack against Hugging Face. And in order to analyze that, Hugging Face attempted to use another model, and that model's guardrails were tripped, and Hugging Face was unable to proceed with that analysis. And so what they ended up doing was using a open weights model that they hosted in their own environment and infrastructure in order to complete that analysis. And so on the one hand, we had a model that was breaking out of its guardrails and showing not enough alignment. And then in another one, we had a model that was using its guardrails to prevent the defenders from effectively doing incident response. So it's a very interesting case study of both sides of this.
This was two American companies, right? An American frontier lab with American models. And a lot of people on social media are posing the question, what if this were an adversary, a ransomware operator, an APT group, but the companies on the defense were sort of stunted, had stunted defensive models, right? In other words, the guardrails that you explained to us in Hugging Face's case.
Yeah, I think in this particular instance, what I would say is the tool matters less than the principle here. And Hugging Face shared their conclusion, which I think is spot on. Defenders, in the case of incidents like this, they need to have capable models that they can run in their own walls. So that the security work that they need to do under very intense pressure and fast timelines isn't going to be blocked. And the data, which is very sensitive data around an attack, doesn't leave their premises.
Kara Sprague of Hackerone, on the road traveling right now, joining the show at short notice, staying up late for us. I really appreciate that. Thank you very much indeed. Some other OpenAI news. OpenAI is adding more Wall Street experience to its board as it prepares for a potential public listing. The ChatGPT maker has appointed Bank of New York Mellon CEO Robin Vince and Nubank CEO David Velez to both its for-profit and non-profit boards. The move comes as OpenAI lays the groundwork for an IPO that Bloomberg's reported could happen as soon as 2027. Okay, coming up, we're going to take a look at the big news across private markets, equities, and AI. Sara Araghi, Franklin Equity Senior Vice President, back on the show, joins us next. This is Bloomberg Tech. AMD is making a major AI bet. The chipmaker says it will invest up to $5 billion in AI startup Anthropic, which plans to deploy up to 2 gigawatts of AMD's next generation MI450 AI chips in the form of Helios rack-scale systems. The first gigawatt deployment expected to begin in 2027. AMD will use Anthropic's Claude AI across its engineering teams and to improve its AI chips and software. And the deal highlights how AI competition increasingly looks about locking in customers, building complete AI ecosystems, not just selling chips. And for Anthropic, more access to supply, more options for compute. AMD actually opened lower. The story's been out there for a few hours, but it's now rebounded with the rest of the chip sector is up 2.3%. The SOX following a very similar trajectory, which we'll get to in a little bit. Let's stick with Anthropic, talk a bit about OpenAI, and look ahead to a monster tech earnings season. We're joined by Sara Araghi, Senior Vice President, Portfolio Manager for Franklin Equity, and a partner with Franklin Venture, and an investor along the way with Anthropic. Yeah. What does that story signal to you?
So first of all, thank you again for having me here today. And so, look, it's a little bit more of the same here. We've seen Anthropic do deals with Broadcom, Google, all the players. They need more compute. And so this is just more of the same here. It shows that AMD is also a key player in this ecosystem. And I think, part of this announcement is ahead of their Advancing AI event tomorrow. They wanted to drum up some excitement about that. And so I think it's a big deal for them.
I appreciate the timing of it. I mean, I remember when Lisa Su was sat where you're sitting now, along with Greg Brockman, and they did a similar compute deal with OpenAI. Right. And the quite reasonable question at the time is, why do you need to make equity investments for this to happen, right? Yeah. If your compute is competitive, Anthropic will just acquire it from you.
Yeah, no, I know. And it, of course, will drum up the circular financing topic here. Right. And look, that's a part of the ecosystem here now. And there's a need for these investments. And so having a stake in this, I think, makes a lot of sense for these companies. And you're seeing every single player do that. And so AMD wanted to be a part of this. I think this ecosystem is thriving. We're seeing all the success here, and we're still in the early innings. So it makes a lot of sense here.
Sara, can I ask you a little bit about the broader ecosystem for you? So, of course, Anthropic and OpenAI are important. But when you look at the rest of the Franklin Ventures portfolio, what about the rest of the companies that you're supporting in private markets access to compute?
Yeah.
Is that a worry right now? Is that something you're feeling confident about?
Look, I think there's Anthropic and OpenAI have all this access to compute. They're getting this, and there's still a need for so much more of it, right? There's so much demand. We're just scratching the surface here on the demand for AI. And so I think they're getting that access. You're seeing the variety of Mag 7 companies needing that access and getting that access to compute. But you're also seeing providers of that now monetizing. You saw announcements from Meta, SpaceX providing some of that compute. So we're not that concerned in terms of the demand on that side, and supply continues to come. Of course, there's a lot of supply chain bottlenecks here, and costs are going up, but over time, that should also correct itself.
We covered in detail an event overnight of the OpenAI mistaken vulnerability. It's hard to put it into...
You didn't sleep last night.
Right, it's hard to put it into one sentence, but you're aware of the reporting and the details of it. What do you think about that?
Look, we get this news, we wake up and there's this news, and it's a little bit more of in my opinion, it's a little bit more of just the fears that we're drumming up around AI. We actually had Jensen Huang in our office a couple of weeks ago,
right,
and he talked about how we're doing a bad job of some of this fear mongering around, ooh, AI is scary.
It's overstated?
It's becoming a little bit overstated. One, just job losses related to AI and what kind of impact that could have. And then just maybe some of the impact around how AI is scary. I think ultimately we know that we're going to get productivity gains around this. And as long as we create some of the guardrails around this, I think we should be using AI. We shouldn't be creating an environment where people are scared about AI. That's creating some of the issues around people not wanting data centers in their neighborhoods. It's making this more of a scary narrative around AI, and I think we need to start staying away from that somewhat.
Okay, I'm going to set the Bloomberg Tech audience up for what is a big Wednesday evening. After the market close, Alphabet, the parent of Google, reports earnings. Tesla reports earnings, and IBM technically reports earnings but has pre-released. And I'm trying to think, what do all three of those companies have in common? Spending, yeah. AI spending. But the relationship with spending is different in each case. Maybe investors are like, okay, Alphabet's going to spend a lot of money. What's the return here? In Tesla's case, everything I read is they want to see Elon Musk spend even more money. Like, get going, Elon Musk, on your AI ambitions of that company. And then IBM maybe, without telling the whole story myself, but like IBM is like, what if you're spending on AI, what are you not spending on in its IBM mainframes? Right. Earnings are important. Are they important? How are you going to go into this evening?
Yeah, look, it's definitely important. Alphabet is going to set the tone on hyperscaler CapEx today. We've seen Anthropic accelerated earnings in Q1 and Q2. How is that going to result in potentially an acceleration in hyperscaler revenue, right? So we want to see some of that cloud revenue accelerate.
I think you and I have discussed, sorry to interrupt you, but before, there is a difference between the capital expenditure deployer and the capital expenditure recipient.
And the recipient is seeing the returns right away, right? That recipient is seeing it in their cloud revenues. We talk about the ROI of AI. The cloud companies are already seeing that right away. And so you talked about it this morning, over 60% cloud revenue growth last quarter for Alphabet. So we're going to want to look for some of that. You point out, and then of course it's going to be important to see some of the ROI related to AI and some of their core businesses, right? How is it impacting advertising? Of course, it's hard to dissipate whether that it's coming from the AI piece or it's just their regular search business. But of course, that's going to be something we're watching for. And your question on Tesla, look, Tesla is very much muddied with SpaceX right now, right? So where is the CapEx being spent for Tesla? Where is that? We just saw the Cybercab announcement last week with Starlink in the Cybercab, right? For SpaceX. So I'm not sure we're really getting the full picture. I think you pointed out this morning, CEO of two companies is going to be on and talking about these companies. I think
not unprecedented. I think like Jack Dorsey's a kind of similar example.
A little bit of that.
But you've talked to me really quickly about SpaceX in the past. Your current thesis on the SpaceX Tesla link up?
I mean, look, I think it's going to take some time, right? We're working through the cap table right now, right? The SpaceX cap table is we still need liquidity events here. So I think that's going to take some time. Of course, the regulatory environment is more favorable to something like that, but I think that's going to take time. Regarding Tesla spending on CapEx, I think we're just going to need some proof points on robotics today. We're going to have to hear some on AVs, and then over time, we'll hear more about that link up.
Franklin Equities Senior Vice President, Portfolio Manager, and leading the venture fund, Sara Araghi. Thank you very much. Okay, coming up, OpenAI is also planning a massive new data center in Georgia, spending tens of billions of dollars to keep pace with surging demand for AI. We have that story next. This is Bloomberg Tech.
It's time now for Talking Tech. I'm Yahira Anand. First up, Tencent shares in Hong Kong fell the most in over a year today, sparking a sell-off in other Chinese gaming stocks. Investors cited worries that the company's mobile gaming revenue could have declined in the June quarter. This as the global games industry is already under pressure. Plus, Samsung is in talks to join the funding round of Mistral AI. That's according to the Financial Times. The South Korean company is in discussions to invest hundreds of millions in the French AI startup at a valuation of about $22.8 billion. And here in New York, Uber and Lyft have won a temporary legal victory. A federal judge has paused the city's new law that would have made it harder for rideshare companies to deactivate drivers. The judge saying the companies are likely to succeed in their constitutional challenge. Ed.
Yahira, thank you. One other story we're watching, Supermicro surging 24%, offering signs that AI infrastructure demand remains strong. There's a strong backlog and a lot of numbers. Bloomberg's Dina covers AI infrastructure, joins us now. What is the Supermicro story?
So, look, their backlog indicates that not only demand is strong, but that Supermicro is taking a good amount of it as they compete with other folks like Dell and HPE. I think, given Supermicro has had a bunch of issues around investigations of its employees for whether they're sending things to China in ways that might violate rules, there's been a persistent concern about, is that going to scare off customers or something like that? Based on the numbers that they pre-announced yesterday, it doesn't seem like it.
Dina, today's big number, more than $30 billion. That's how much OpenAI is planning to spend on a build out of this massive new data center in Savannah, Georgia. A story you reported this morning, lots of readership here. What do we need to know? Where does this fit in with the OpenAI infrastructure plan?
Look, part of OpenAI's infrastructure plan is just getting more as quickly as they can. But there's two interesting things that we see in the way that they're announcing and doing this data center. One is that in this case, they have designed and are designing the data center and went out and secured the power contract themselves. This is, a bit of a change from what we saw earlier on in their infrastructure deals and the earlier Stargate things, where they were relying a little bit more on partners. And then moving into compute that was already kind of developed for them. Here, they're doing that design work. And when I spoke to their head of compute, Sachin Katti, yesterday, and he said, look, we've done a couple of these now. We know what we want. We have a specific design that works. And the other interesting thing he told me is that, over time, they're hoping to have a design that they can standardize and then open source and share with other people. He mentioned kind of similar to the Open Compute project that Meta developed in 2011. He thinks it's better for OpenAI, better for the industry if there's some sort of standardization around what people need for these AI data centers. The other thing that we're seeing is
Sorry, Dina, we're halfway through the show. We've got to go. But I would say it's a must-read on Bloomberg, on the terminal and .com today. Bloomberg's Dina Bass leading AI infrastructure coverage. Okay, Apple's planning new versions of every single Mac that it sells, including updates to its desktop computers and the laptops. Yes, another Bloomberg Mark Gurman special coming right up. It's halftime from San Francisco. This is Bloomberg Tech. Welcome back to Bloomberg Tech. Treading water a little bit on the NASDAQ 100, symbolic of treading water ahead to Alphabet's earnings after the bell. I would say that since we've come on air, there's been a change in fortunes of semiconductors. We've seen a rebound on the stocks in line with AMD that continued to gain, having opened lower, but that $5 billion equity investment in Anthropic and a multi-year deal for 2 gigawatts of compute. Another big story breaking this morning. Apple readying a major overhaul to its Mac lineup. Beginning later this year, the company is going to be introducing new computers, including a refreshed low-end MacBook Pro, new iMacs, and a high-end MacBook with a touchscreen. That is all according to sources. And Bloomberg's consumer tech and Apple managing editor Mark Gurman broke the story. I find this so interesting because, in the AI age, we've been through the cycle of the AI PC. Who needs an AI PC? That Apple side of the story fascinates me. You have a lot of detail in the report this morning. What are the main highlights?
There is so much coming from Apple over the next 3 months, over the next 6 months, 9 months. The next 2 years are going to be a blockbuster period of new products. We've already detailed the iPad roadmap last week. Now we're talking about the Mac roadmap. There's about a dozen new Macs in development right now. You're going to see the first new iMacs in 2 years, new Mac Minis, new Mac Studios. There's a new MacBook Air, a new MacBook Neo coming next year. But a lot of the focus is going to be on the high-end MacBooks, so things like the MacBook Pro. There are a few new MacBook Pros in development, There's the first M6 model, which is a major new chip, great for AI, coming out September, October timeframe. And then between the end of this year and early next year, you're going to see probably the biggest overhaul to the MacBook Pro in that computer's basically 20-year history. For the first time, Apple is going to introduce a touchscreen to the Mac. It's going to also be OLED. It's going to have the dynamic island. It's going to be a seriously hot machine. I think it's going to be very popular. These first versions will use the M5 Pro and M5 Max chips, which are pretty good for AI. There'll be a subsequent update a year after these first ones come out with M7 Pro and M7 Max chips, which are built entirely around artificial intelligence, on-device models, more advanced processing of both first-party and third-party AI applications. So if you're a computer user, a Mac user, or an Apple investor interested in their AI strategy, there's a ton to like here.
And read Mark's story out on the terminal and on Bloomberg.com this morning. There's a lot happening this morning in the world of consumer technology. Samsung has its big hardware event. Let's start on the smartphone side of what Samsung's announcing. Where is their focus?
So 3 new phones. There's the new flip phone. There's the new Ultra phone, the Z Fold 8 Ultra. That's their high-end foldable phone. But I want to talk to you about the Z Fold 8, which is their new mid-tier foldable, replaces the larger size they've had for a few years now. It's the one you're showing on screen right now. It's incredible. It's amazing. It's going to sell super well. It's the same exact form factor that Apple is going to be releasing this fall. The wide format is awesome for gaming. It's pretty good for multitasking. Where it really shines is ebook reading and watching video on YouTube and what have you. It's a little shorter than your typical phone, but wider. It's a really cool form factor. You have to get your hands on it to really understand it. I'm pretty pumped for the Apple version, but the Samsung one's going to do great too.
Okay, smart glasses. Samsung has actually had quite a lot to say about smart glasses. Where are they on the product side, and why are they worried about privacy when it comes to smart glasses?
Yes, so they're launching their glasses in concert with Google and Warby Parker and Gentle Monster later this year. We're told these have about 9 hours of battery life. And, you know, these are standard fare. All the smart glasses without displays that you're seeing from Meta, from Google, now from Samsung. You'll see them from Apple too next year. They're pretty much all the same product, cameras, audio technology. But Meta, you know, as fast as the category is growing in terms of sales and usage, is as fast as people are becoming concerned with the privacy of these products. Royal Caribbean has banned them from casinos and bathrooms and children play areas on its ships. There have been courthouses in Wisconsin, New York, and Pennsylvania that have banned these things. There's a lot of concern about the privacy implications, and of course, that is because of the Meta privacy baggage that they've had for years now. So Samsung, Meta with its own pair of glasses, Apple, of course, are really going to need to figure out the privacy story here to get people not only comfortable wearing them, but to get people around people who are wearing them to be somewhat comfortable.
So when I woke up this morning, none of this news was out yet. And actually the biggest story was what you had written out yesterday about upgrade device lease programs and Apple's relationship with Klarna. Like, a lot of people were reading about that. We have time. What do we need to know?
This is a blockbuster new initiative from Apple. It's called Apple Upgrade. They're going to announce it next Tuesday. They're going to roll it out on their online store and in their physical retail stores. This is essentially a hardware subscription program or a leasing program. This is something Wall Street has wanted for a while. As these Apple products become more expensive, as Wall Street wants to look for ways to get people to upgrade more frequently to new Apple devices, a leasing program is exactly how Apple's able to do this. So you'll be able to lease an iPhone or Apple Watch over 24 months or an iPad or Mac over 36 months. You'll make monthly payments just like you're leasing a car. At the end of the lease, you can either give it back or you can buy it out with a fee. These are going to have less costly payments compared to financing and iPhone upgrade programs that Apple offers today. So this is going to replace those. And I think it's a gigantic move for Apple to try to lock consumers in long term, to spur upgrades, and to get people to buy devices that maybe normally they wouldn't be able to afford. Now that you've seen price hikes on all their Macs and iPads, the iPhone is about to get a price hike. And of course, the foldable iPhone that we just talked about a couple minutes ago, that's going to be a pretty penny as well, coming in north of $2,000. So Great timing for Apple here. They've been wanting to do this since 2022. They originally were going to do an in-house version that they were going to financially back in concert with Goldman Sachs. Now that the Goldman Sachs relationship has fallen apart, Apple deciding they don't want to do as many financial services in-house, they're partnering with one of the name brands here, which of course is Klarna. And you saw their stock go up about 11% when we put our story out yesterday.
Apple device lease program. Bloomberg's reporting on the overhaul of the Mac lineup at the high end. Samsung smartphones, latest generation. Samsung smart glasses, all from Bloomberg's Mark Gurman, who leads our consumer tech coverage. Thank you very much. AT&T reported its second quarter earnings with greater than expected mobile subscriber gains, and the company's valuation will ultimately correct itself as the wireless company positions itself to be indispensable in the AI era. That's what they're saying. AT&T CEO and chairman John Stankey joined Bloomberg Surveillance earlier today.
I think there's been a stratification of pricing for customers depending on what kind of services they want to buy. There's the segment of the market that needs high-performing, symmetrical gigabit services, very robust wireless plans. That segment of the market is willing to pay for that, and they pay a premium as a result of that exceptional value that they get back. We've played very, very well in that space, given our asset base. But there's also a segment of the market that's more value-oriented. And I would say choices have come into the market because of good regulatory posture that have allowed investment that weren't there before. And those choices are putting more value-oriented products and services at more attractive price points, but the product and service maybe isn't as robust. And at AT&T, we've played really well up market, but not as well down on the value space. And we've been working hard to get our product portfolio so that it matches up across the entire continuum of the market. You saw that in the results this quarter because our account additions, new accounts to AT&T, hit like a 3-year high. And that's because we're doing a lot better job down market. And there's nothing wrong with having a more affordable product that's tuned to certain parts of the market. I don't consider that a price war. I consider that meeting market needs, as long as you're doing the things that you can do up market, which we've done very well. And I think when you see margins the way they are at AT&T, this is like a record for us. That's a good sign that we're getting that balance correct.
Over the next 5 to 10 years, John, how do you see the breakdown of the mix of broadband and fiber on one hand, the wireless or the more budget-sensitive areas, and then satellite from the likes that you're seeing from Starlink?
Look, my point of view is they have a fantastic product. There's great innovation that's moving in that space, and it fits a part of the market that hasn't been well served, especially in less densely populated areas. And, the interesting part about that is our investment has largely been in urban and densely populated suburban. We haven't pushed real hard in the rural and less densely populated areas. That tends to be more the stronghold of cable companies. I think they'll do pretty well in that space, bringing an alternative and competition in there. I think it's going to be very hard to come into the more densely urban populated areas to compete with that bundle that I just talked about earlier of fiber that is the best product in the market, best performing. It's the lowest marginal cost, our great wireless density that far outstrips what you can do from direct-to-device and satellite. Years of investment in the hard-to-reach places like stadiums. Everybody who went to a World Cup game knows how important being able to connect in a stadium is to experience what goes on socially and actually in the arena so that you can see a few replays that they're not showing there. We've been doing that for, a long, long time, and it's going to be very, very hard to catch up on that infrastructure, and I think we're going to do really, really well competing in metro and suburban areas, which is where our investments have been.
That was AT&T CEO John Stankey. Coming up, there's a glimmer of good news for young workers in AI-exposed jobs after months of employment decline. Nela Richardson of ADP is going to tell us why. That's next. This is Bloomberg Tech. After 5 straight months of declines in early career employment, there's some encouraging news for younger workers in AI-exposed jobs. New data from the Canary's dashboard shows employment for that group edged slightly higher in June, offering one of the first signs the trend may be stabilizing. Joining us for more is one of the researchers involved in the project, Nela Richardson, chief economist at ADP and a former senior economist here at Bloomberg. Really interesting data that we have been tracking for time. It's a slight change of trajectory in June, but it signals something. What is it?
Well, Ed, thank you. Thanks for having us on to talk about this exciting new report. This is a collaboration with Stanford Digital Economy Lab, and what it's showing is that early career in AI-exposed fields is affected negatively in terms of employment when it comes to AI, and we've tracked that since 2022 in the AI rollout. But what's unique in June is that we're finally seeing, as you noted, that stabilization. And what's important to remember about this Canary's dashboard, it's more than just an employment index. It's a transformation index. It's showing in real time how actual AI occupations and high exposed AI careers are being affected by these new tools entering the workplace. And so that's why it's so critically important to see an uptick in June. Because if we can move AI impact from automation of skills to augmentation of skills, especially with early career, then we have something. We have that secret sauce that the labor market has been waiting for.
Taken in aggregate, right, the labor market data for June shows the market cooling, but underneath something is happening. I think the way you'd put it is that it's quietly reshaping underneath that top line. Is that That's very right. specific to AI as the catalyst for that?
It is. There are two drivers, in my opinion, that are affecting the labor market. It's AI and it's aging. The demographics of this change are super important. Back where I'm from, we say still waters run deep. And we see a lot of still water in the macro data. This is a low hire, low fire environment. But the depths is what we can see with this new Canary's dashboard. It's hard as a young entrant to move into a labor market that's not very dynamic. And so if you can see AI start to pull in that young labor in a different way and augment their skill base and level them up, then you have a different kind of productivity than we've ever seen in the past. And so right now, the drivers of the job market are pretty AI agnostic. It's healthcare. Those are demographically driven because of this aging workforce. But that doesn't have to stay that way. In fact, some of the most exciting innovations about AI are in healthcare. So if we can match the labor with the tech that you are so super focused on, Ed, then we have the ingredients for high-scale growth.
Right. Well, that's why I want to go back to younger workers, because that is representative of the Bloomberg Tech audience and industry as well, right? You are focused on ages 22 to 25, 26 to 30. Let's go back over those trends quickly.
Yeah, since the rollout of ChatGPT in 2022, in the fall of 22, we saw a noticeable decline in employment for these young workers. It's deepened even for that second stage of early career, the 26 to 31. And it was present all along for the 22 to 25. And if you juxtapose that with older workers, it looked like AI actually gave employment a boost in those AI-exposed fields. Now, this is what we're talking about, AI-exposed occupations, software developers, customer service reps. That's where we're seeing the action in terms of AI impact and the negative employment trends up until recently, this June data. But if you're looking outside of AI-exposed occupations, you're not seeing the same story at all. You're seeing employment growth in these really high demand, non-AI exposed fields tied more to demographic change.
Nela Richardson, chief economist at ADP, thank you very much. Now coming up, IBM, ServiceNow and Alphabet all report after the bell. What Wall Street's going to be watching when the numbers hit. That's next. This is Bloomberg Tech. IBM and ServiceNow are set to report quarterly earnings today after the market closed. The numbers come at a crucial time, particularly for software companies that are facing a crisis as clients shift away from traditional software in favor of AI products. Joining us, Bloomberg's Brody Ford. So IBM pre-released, right? And that was a story where not AI is not important, right? The mainframe business in particular, they now do full earnings this evening. What do we need to know?
The big question for IBM is whether the funding went from mainframes to other kinds of AI hardware, as they said, or whether this is really spread more widely.
IBM, you mean?
Yeah. Exactly, right. Is their software business impacted? Are folks buying a variety of IBM products no longer because they're too busy trying to buy a bunch of memory chips before the prices go up? That's kind of the big question for IBM tonight.
What's the story for ServiceNow?
Story for ServiceNow is the same as a lot of application companies, which is the AI monetization story real? Are the growth rates going to hold up? Is the AI growth coming at the expense of their traditional businesses, or is it truly additive? I mean, it's been a similar narrative for like 3 years now on the application companies, and the market's
That's why I find
getting...
like you just dominate reporting of this space. Like, there is a common thread here across all these different software names or application layer names, or it's more idiosyncratic?
It remains pretty consistent across the application layer because this is the one that is getting the most kind of competitive pressure. It's not clear that they've been able to directly monetize AI in the way that a infrastructure layer name like a Microsoft or a Databricks has.
Bloomberg's Brody Ford will be very busy after the closing bell.
Yep.
So will some other people. Another tech heavyweight reports after the bell today. Alphabet, after ramping up AI spending to record levels, investors want to see whether those investments are driving growth across search, cloud, and AI, specifically Gemini. Joining us now, Bloomberg's Kurt Wagner, the editor who leads our coverage of big tech for us at Bloomberg. So Wall Street is just like zeroed in on CapEx spending. Are they worried about it?
I think a little bit. That's evidenced not just by sort of the fact that it's such a focus for Google, but it's been a focus for Meta, as you know, Microsoft and others that haven't yet reported. So I think this is going to be an important moment, not just for Google, but for the industry at whole, to sort of show that these hundreds of billions of dollars these companies have committed to AI and infrastructure this year are actually going to have a return. And so I think Google Cloud in particular is going to be a first real test of that.
Right. So a lot of people in the Bloomberg Tech audience and around the world would say, okay, Google search. But really, when it comes to growth that's like AI linked, Google Cloud's where we look.
I think that's right. And we saw a good report from Google last quarter. The revenue from Google Cloud was more than $20 billion for the first time, and that was better than expected. I think the numbers now, the estimate is somewhere around $22 billion, just north of that. One other thing to keep in mind, Ed, is this backlog of potential revenue for them. I think last quarter they said they had $460 billion of cloud backlog. So the faster they can get data centers and compute online, obviously the faster that goes from just a paper commitment to actual revenue for the company. So going to be focused on Google Cloud revenue, but also what does the backlog look like and how quickly are they turning those commitments into real dollars?
You know what's really exciting is it's just day one. Google's just the first to report, and then there's loads more. But often how it works is like Google signals something for the other hyperscalers, right? I think that's why we try and take a bigger picture this evening.
That's right. And I love that you and I can get excited about day one of big tech earnings, Ed. This is great for that. But I think next week we have Meta, we have Amazon, Microsoft all reporting. And a lot of the narratives and a lot of the stories are going to be similar, even with Meta, which hasn't historically had a cloud offering. As you've seen and as we've talked about, they're now looking like they're going to get into the mix on that too, right? So if Google is starting to show promising signs with its cloud business with that demand, if it's still high, it shows obviously a strong appetite for AI across the board. You can probably assume that might be reflected by some of those other companies as well.
Kurt Wagner, who leads the team covering the biggest technology companies in America. Thank you very much. That does it for the edition of Bloomberg Tech. So we talked about the calendar. This is what it looks like. Alphabet, Tesla, ServiceNow, IBM after the market close today, Wednesday, Intel Thursday, then many more next week. The OpenAI Hugging Face story is so important. Recap on the podcast. That's how we started the show. You know where to find it online, Apple, Spotify, iHeart, and all the Bloomberg platforms. From San Francisco, this is Bloomberg Tech.